Hey everybody, Joshua Phillips here, Churchill Mortgage, coming to you with the market update on Saturday, September the 28th. And here we are now 10 days after, and I'm working remotely. Sorry, the video quality is not that great. I am working remotely. But wanted to send out an update to everyone that's interested in what's going on with mortgage rates. So it's been 10 days now since the Fed cut the Fed fund rate 0.5%. And as we always do, as you'll see on the screen here, this is mortgage-backed securities. This is a mortgage-backed security chart. This is where mortgage rates derive their values. This is what every good loan officer in America looks at every day to see what's happening in the market. Now, again, if you've been watching this for a while, you already know that red is bad, green is good, and the higher the security price is, the better mortgage rates are doing. Now, I've got some interesting news for you. On the day the Fed cut, well, we did not see mortgage rates improve. In fact, we actually saw things get a little bit worse. And in fact, the last 10 days here, if you've been following, if you want to follow these charts here, we've been getting just a little bit worse. Now, why is that exactly? And to be honest with you, I don't 100% know. The economy is complicated, and I'm not an economist. I'm not Chairman Powell and completely understand these things. But one of the things that comes to mind is this idea of buy the rumor, sell the news. Buy the rumor, sell the news. They talk about that with stocks. And I think I've seen this happen with other stocks and other products, where once the news actually comes out as expected, we have a little bit of a, we lose our sugar high, I guess, afterwards. So as I've been trying to explain the last few market updates, it's really going to be about what's happening next, what's coming next. Is the Fed going to continue to cut the Fed fund rate, and what does the overall economy look like? Now, some good news. As we started to fall this week, and I've talked about this a little bit, we came back down. You see that red line right there. That is the 25-day moving average. And we've been above it for almost 3 months now. We've been above that 25-day moving average. And here it is this week. We actually, in the last couple of days, touched on the 25-day moving average. Now, I was praying that we would not go below the 25-day moving average, because that is a negative sign. But Thursday and Friday, we kind of held in there. Friday, we were up just a little bit. We closed above the 25-day moving average. So by the skin of our teeth, we are above the moving average currently, which is still good news. And I still think, that's why the language I've been using for weeks now is that rates are slowly improving. And you know what? We can't expect them to always improve every single day. So, let's consider this just taking a breath. The market just taking a breath, and we saw security prices come down a little bit. Mortgage rates probably got worse about 1/8 of a point since so nothing significant, but maybe 1/8 of a point we've seen since the Fed cut the Fed fund rate. Now, switch over here to CNBC. This was come out yesterday. This is the type of headlines we want to see. Key Fed inflation gauge at 2.2%. The Fed's goal is 2%, and lower than expected. So, man, we are getting right there to that 2% that the Fed, and maybe, I don't know, maybe they're concerned it's gonna dip too low, with these things. So, the other thing I always like to keep track of, that you can keep track of, is the 10-year Treasury yield. Let's pull that up here real quick. So if we look at the 10-year bond, we want to see the 10-year yield go down. That's what we're hoping for, is the 10-year yield to go down. But this is kind of reflective of what we've been talking about, which is, if it'll pop up here, well, it's kind of, let's see if we come back here to like the last 3 months. It kind of popped up a little bit in the last 10 days. Why is that? Again, I don't exactly know. Again, I still believe long term we're going to see mortgage rates improve slowly. There will be weeks, days like this where things are getting a little bit worse. Don't panic. I do think we're going to see mortgage rates improve. We do have the election hanging out there, which I've been saying is a little bit of a unknown factor in how that's going to affect things. But you know, we'll just hang in there and see what happens next week. Hopefully, we'll stay above the 25-day moving average. Hopefully, we'll see things improve. I'm hoping we can start looking. I've got a lot of clients I'm watching mortgage rates for refinances, and hoping here in October, as we head into October, there will be some opportunity to refinance. Anyway, listen, feel free to reach out to me if you want to talk specifics, if you want to get pre-approved. Again, talk specific about your mortgage rates. And of course, if you want to do an application, I always include that in an email that I send out. So feel free to do that as well. Well, take care. Have a great rest of your weekend. Bye.